Back into this discussion, the markets seem to be liking the numbers so far. We're still looking at triple-digit gains for the Dow. What do you make of these numbers?
Well, it's still early, but, Rick said that no one's talking about the dollar. I talk about it every time I come on this program.
I will give you that. You do.
Very few people listen to me. This PCE number that we just got, that's one of the most disingenuous of the government's inflation numbers because they use substitution. So what they really do is measure the cost of survival, not the cost of living. And then to look at the core is even more ridiculous. But if anyone believes that inflation is only 2.5% annually, when you can see on the ticker there, oil is running at $77.50 a barrel. The dollar is collapsing to record lows. There's no way inflation is only 2.5%.
Peter,
wait a minute.
I won't even argue with you that real inflation is not necessarily what we're seeing in these numbers. However, the Fed takes a look at these things and has a big part of their decision on whether or not what they're going to do with rates comes out of that. Doesn't that have a huge impact? Isn't it something we need to pay attention to?
Right, but it doesn't matter what the Fed thinks. What matters is reality. I don't care if the Fed thinks there's no inflation, or I don't know what they think. I know what they're saying, but I know they have an agenda, and their agenda is to paint a very rosy picture of things,
Becky,
because they're afraid of the consequences.
Becky, if I may.
Ron, get it.
Let's assume that everything that Peter said is right, that the numbers are skewed for a particular agenda. Now, that would mean that the bond market is being fooled on a constant basis, and that those independent investors who can judge inflation for themselves without the help of government statistics would, in fact, be buying into some sort of mass delusion about inflation.
Well, remember,
Peter, let me finish the thought for just 1 second. This has become a common refrain for me to say around here lately.
I'd like to finish one thought.
Yeah, the notion is that the bond market would be inaccurately pricing in inflation expectations all the time.
Right, let me tell you why that's happening.
Well, hold on, Peter.
Yeah.
That would create an arbitrage opportunity of historic proportions, that whoever figures out the real number will make a fortune, while the people who are being duped keep losing money.
We were short all those BBB minus tranches and made a lot of money. They were being mispriced for a while.
But you're arguing permanently.
No, what's happening is the reason that bonds are so low is because foreign governments, principally in Asia, have been buying all these bonds, and they're doing it for political reasons, not economic reasons. If you want to look at what independent people are doing around the world, they have been shunning U.S. bonds. It's governments who are doing it basically at gunpoint for political reasons. And interest rates are much too low, and they're going to go a lot higher. Bond prices are going to collapse, just like real estate prices and just like stock prices.
Actually,
can I turn to Diane real quickly?
Yes, let's get Diane.
Diane, let's talk about the third quarter. We know we got this rebound in the second. It was 3.4. Maybe it's going to be adjusted. A couple ticks either way. So you add that to the 0.7 or 0.6 in the first quarter. You average it out, 2% growth in the first half. Tell me why I should think that the 3 number continues into the third quarter, or is it another 2 kind of quarter for the third quarter, Diane?
I think it's a 2-handle quarter, more 2 3/4% quarter. So we're talking about an acceleration in growth from the first half of the year, but we're not talking about spectacular growth. There's several reasons for it, not the least of which is that potential growth has slowed, productivity growth has slowed, and the Fed is on alert for inflation. I'm concerned about global inflation, and if you talk to any of these guys, listen to what they say, they're worried about inflation as well. In fact, one of the greatest debates today is whether or not to look at the core or overall inflation, because we do care about oil-based inflation.
I think that's an excellent point, Diane, is that for all Peter said about the Fed, that has been their number one risk, inflation. It's hard to say that Fed has been underpedaling or soft-selling the inflation story.
They have not been at all.
Yeah, this repricing of risk, though, is very important, because we found out that a lot of people...
important.
Right, but a lot of people were mispricing the risk in all these mortgage-backed securities and CDOs and subprime debt. And similarly, people are mispricing the risk in U.S. Treasuries. There's a lot more risk out there than people believe.
I agree with you. I agree with you on that, and that's something the Fed has pointed out as well.
On that note of agreement, folks,
we can't disagree
we've got to leave it here. We've got to leave it here. We can't disagree at the end. The last word on that. Sing kumbaya. Here we go with this one.
We can actually agree.
Peter, Diane, thank you very much. Also, our thanks to Steve and Rick, and Ron's going to be around for the rest of the show.
Our next segment with Peter should be in a parking garage in Washington, and how Holbrook can join us. It's a little bit like...
Or Mr. Beeks passing the inside.